I want to ask you about the response from all the various cities around the world that are now seeing huge influxes of global capital into local real estate. London being a great example, but take your pick. New York is another good one. There can be a reaction, unfavorable reaction to that. You know, what are all these billionaires coming in from around the world and messing with my local, market? What do you think? What do you make of that? Is there anything to be afraid of, or is there anything maybe that developers could explain to local real estate markets around the world that would help ease tensions with some of this global capital flowing into local real estate markets?
Wow.
Or do you think too much is being made of it in the first place?
That's a very big question. I think my one answer would be I think probably too much has been made of it. I think the international flow of capital is a good thing, generally. It's the continued globalization of the real estate industry as a whole. I think you need to break it down to degrees between commercial real estate and residential. Residential pulls a lot more of the heartstrings and gets a lot more of the press around the billionaires coming in, billionaires row, etc., whatever it may be, whether it's New York, London, etc. But let's look at commercial real estate to start off with. I think the role of foreign and cross-border investment is nothing new. I mean, people talk about it today, but the reality is if we go back the last 10, 15 years, cross-border flows of capital have always equated for about 40% of total transactions that take place on a global basis within commercial real estate. What has been the change in recent years, and I think is one of the things that's got it more high profile, is the mix of that international investor. So the growth of the Asian investors. And that tends to get more press. But actually, if we look back between 2004 and 2014, the biggest global investor was the Germans. And no one's really been talking about that at the same sort of level as now everyone talks about China. You could spin it the other way around as well and say, last year, I think it was last year, North America exported 5 times more capital than the Chinese did. So you look at the global investors, it really is not just Asia, not just Middle East, not just Europe, it's America as well. So I think this flow of capital is something that drives our real estate market. It helps, I think, will smooth some of the cyclical nature because you've got different pools of capital which have different demands on the return level. So hopefully we'll try and smooth some of those volatility we've seen within the commercial sector specifically. So generally, I believe that the flow of foreign capital is a good thing for the different markets. Residential is a very, very emotional subject. I'm from London, I see it. It's what we would call, in our tabloids, or it's what the white van man, so the man on the street, would talk about. And there's a lot of press about the fact that a lot of new build condominiums or apartments are being sold in the Asian market, and a real concern that these apartments will be left vacant. However, whilst that is a concern that needs to be monitored and measured, you also need to look at it and say, without that inflow of Asian buyers into the London real estate market, our construction industry would have stalled for a lot longer. It really enabled us coming out of 2007 to grow as a result of Asian buyers coming in, which then helped fuel part of the recovery that we have today. Yes, I believe that it needs to be watched, but generally it is something which sometimes gets a lot more hype than actual reality. And we are not seeing big blocks of vacant towers with the lights not on. They are being occupied. So again, I think it's a good thing. And that flow of people, capital, ideas, creativity. If you want to be a world-leading city, you need to have a truly international population, and you shouldn't do anything that hinders that flow.
What's driving the flow of Asian capital in particular now, and do you think it'll continue to grow as a share of the international flow of capital?
Yeah, again, I think I get asked that quite a few times, and one of the standard responses, and it's one of the things that's being talked at the conference here today, is safe haven status. In times of economic uncertainty or maybe political unrest in different countries, there is a desire to place capital in safe havens, which may be New York, London, the great cities around the world. Without a shadow of a doubt, that is a key role. But I actually think you need to step back. You need to step back and look at some of the absolutely macroeconomic things that are going on in the world. If you look at it and you look at, say, global saving rates, we are having the emergence of the China, Indonesia, India, the developing world. The population is beginning to save. That population never used to save before. So a study has shown that by 2022, it is likely that global saving rates will hit around about, it's about 37 trillion in terms of global savings. But the countries which are having a really fast, rapid growth within that sector is China, which is expected to grow at 17% per annum in terms of its savings, Indonesia at 16%, India at 16%, which means by 2022, China will equate for about 39% of total global savings. Now this savings, this pool of capital where people are trying to save for the future because they don't necessarily have a public services benefit system to back them up, this savings and this capital has to go somewhere. Now, real estate is just one of those investment vehicles where that capital can be placed.
A particularly popular one.
And particularly popular one, and especially with a lot of Asian investors because they can understand it. It's a tangible asset class which they can look at. So basically, you step back and say there's a lot of money that's being saved. That money has to go into different investment vehicles. At the moment, real estate is very popular. It's something that's seen as tangible and is taking a large slug of that capital. I have no doubt over the periods of time, there will be dips when it's not so popular and be less money put in there. But however you look at it, the fundamentals are that the developing world is saving a lot more and there's a lot more capital, and that capital is not going to go away overnight. That capital is here. There's a structural change within the global real estate market.
And things like the stock market shock in China this year and the party declaration against weird buildings, those things would be just further, those would be just blips, I guess you're saying, in the way of...
I think generally it's just blips. It's short-term blips, and that's what you will always have, but generally there is more capital that's being saved. Real estate is becoming much more of a understood asset class. There was a study by PwC which said that at the present moment in time there's about 8 trillion which is allocated by the big institutions, if you want to call it that way, sovereign wealth funds, to alternatives. By 2020, they expect that to increase to 15 trillion to go into the alternative sector. And real estate is a big slug of that. So I think it's just a general change with a lot more savings and therefore more capital to go into real estate.
What do international investors look for in a local development partner?
It's such a broad question, it's difficult to know where to start with that one, because I think it very much depends on the nature of that international investor.
Sure.
You could be from one side where that international investor wants to be very passive, or you could have an international investor who wants to be pretty active within the investment that he's investing in. But I think overall, without a shadow of a doubt, they are just looking for a best-in-class operator within that marketplace. They are looking with someone who really knows how to work within that micro-location, understands the zoning, the regulations, the local players, and can unearth opportunities which an international investor otherwise would not be able to find. So they're looking for local expertise. But as I said, it really varies from investor to investor because some investors will demand significant co-investment. Other investors will be less concerned about that, which means they may have a wider pool of potential partners to play with. So it really varies between that international investor, what they're looking for.
So for local developers, there's no playbook for them if they want to be attracting this international capital?
There's only one playbook, which I would say, which is you have to commit yourself to do the hard work in terms of it is like any other business. It's about the strength of relationships and feeling and developing that relationship. So if you want to attract and be partnering with international capital, it's really putting yourself out there and spending the time with people.
What do you think will be the frontiers of development fueled by the international flow of capital? I mean, we already see it happening in practically every corner of the world, but do you think China will continue to be a frontier for this? What do you see, if you could look in the crystal ball and predict the future a little bit, as some of the frontiers for development fueled by global capital for the next 5 to 10 years, say?
So when you're saying frontier, you're talking about where that source of capital will come from?
From or in what cities do you think will be changed the most? You can take it however you like, but 5 to 10 years, how you see the flow of capital influencing real estate markets?
Yeah, I mean, I guess let's first of all look at that source of capital. I think there's a lot of talk about Chinese capital that will only continue to grow, in my personal opinion. Obviously, that's always caveated if there's a geopolitical issue or something within China that's a lot of slowdown, then there will, without a shadow of a doubt, the regulator will try and probably dampen some of the outbound capital. But I think China will continue to be a big player. We've only just begun to see the emergence of Indian capital. There's a group called Lodha who've just started to invest within London. They intend to try and grow that to 5 billion. They're a very large Indian developer. I think they're developing the largest residential tower in Mumbai at the moment, so a proper player. So we haven't really seen any Indian capital come into the market. South American capital is beginning to grow. Brazil, Chile. So you're beginning to see different sources of capital come out of those markets. I think that it'll be interesting to see what happens with some of the money coming out of the Gulf states. We've seen the sovereign wealth funds for quite a long time. I suspect that if the oil price stays low, there'll probably be less money coming out of the sovereign wealth funds. But some of the instability in that region is definitely resulting in more private capital, and that private capital is very substantial to invest outside. So I think you'll continue to see China today, but moving into India, some new sources of private investor capital out of the Middle East, and then South America grow and become major players. In terms of where that capital is going to go and those new type of frontiers, without a shadow of a doubt, you know, the big six, if we call it that, of the global cities, which everyone knows, Singapore, Hong Kong, London, you guys know which those cities are. They will continue to attract a vast majority of that capital. However, I think it would be one of the things which I think is probably more interesting is what we would call those emerging cities. Those cities where investors are looking at, and they say some of the smaller cities, but have a real balance in terms of they have the young millennials located within them. They have a really good work-life balance. So I'm thinking about cities such as Sydney, Austin, maybe Munich, Berlin, where today, if you look at them in terms of on a global basis, in terms of their scale, they don't fit within the top 50 in terms of the size of the cities, but they are already well up within the top 30 of where investment capital is going. So I think we'll begin to see, as investors become more knowledgeable, maybe looking for a slight edge on cap rate or return, so moving away from some of the big six and going to some of those cities, like I say, in Austin or Boston. I mean, Boston's probably one of the big ones already, but the ones where they have that really work style, lifestyle balance, where the millennials, to be blunt, want to live.